Thanks for taking the time. Lyft is, often compared to Uber, but as far as I'm, aware, Lyft is not in the same situation in terms of prepared for a pandemic shutdown that keeps people indoors. It's not as exposed to the food delivery department, let's say.
Yeah, and that's going to be, I believe, Alex, a huge problem for them in this upcoming earnings. Now, I would have said, 6 months ago, these are two companies that both take, I think, the majority of my money. Now, that has completely changed. I was thinking actually today when I was, reading about Lyft and Uber, I haven't taken a Lyft in about a few months. And I have to say, I kind of think I represent a lot of people here because, we're trying to social distance and also we're not going anywhere. So there's nowhere for me to even take a Lyft to, really. And, unlike Uber, which of course you just mentioned, Lyft doesn't have this delivery arm to lean on. And this is going to be a huge problem because, right now their only way they're making money is ride sharing. Now, if you compare just Uber and Lyft just as ride sharing companies, Uber's ride sharing segment actually declined 73% year over year in their earnings report they reported last week. So a 73% decline for Lyft, if this is any foreshadowing of their earnings, this is not good. Analysts are expecting the lowest revenues in more than 3 years. So kind of doom and gloom, it seems like, coming up. However, there was some news this week, of course, this will not be in the latest earnings report, that a California judge granted preliminary injunction, which could force Uber and Lyft to reclassify their drivers as employees of the state. Now, following this statement, both Uber and Lyft said they will appeal this ruling. However, Lyft seemed pretty optimistic. They said that we believe this issue will be decided by California voters and they will side with the drivers. Now, to kind of go over what this law was, Brian Merchant said on Twitter today, Uber and Lyft must immediately reclassify their drivers as employees and not independent contractors and provide benefits accordingly, a California judge has ruled. If this stands, it may be the most significant legal ruling in gig economy history. Now, the noise on this was just completely divided. People agree that this should happen. Other people believe it shouldn't, of course, but Lyft seems pretty confident that the people of California will side with them. So who knows what that will be, but either way, the ruling, right now they're kind of holding their breath to see what will happen with, a huge part of their economy in California. Now, our next tweeter goes into a little bit more of the fundamentals of Lyft going into earnings. Our next tweet says, thought about shorting Lyft at $28. Events and bars are still canceled and closed. Tesla could enter the market and crush them at any time, and we know not to doubt Tesla. They have to boost R&D to get profitability, but they'll run out of cash if demand isn't high enough. But, and they continued on to a second tweet, almost all costs are variable. They have enough cash to survive at least 2 years, and their rebounding demand reducing R&D probably just keeps them unprofitable for longer, but not shorting them without risk of BK. They probably go higher after earnings if estimates based on negative 70% year over year. So what I kind of took from this is that things are not great in the short term. However, they do have cash to survive, and this could mean that the story for them is not over long term. So, Kevin, with a company like Lyft, when we seem pretty certain that things will not be good in this upcoming earnings report, how do you trade them knowing you need this kind of protection?
Well, Jenny, there's a lot to go through there, but first and foremost, the biggest difference between Lyft and Uber is Lyft has got the same rules as the Hinks family has. No food in the car. That's the rule, Jenny. But Uber will deliver anything. Lyft just delivers people. Now, Uber's got an international take. Lyft is pretty much the United States. Lyft is just a smaller company, but they are, this ruling out of California, which will go to another court. There'll be appeals. This is just one ruling, and you can count on California on a general basis to do the most anti-business ruling normally. But this is going to go to a higher court, and it's going to be decided by the employees and the consumer. So this is just round 3 of a heavyweight battle in terms of making them employees or general contractors. That being said, what we're talking about today is their earnings, which are going to be horrible, but it's all about how they project the future. That's what Lyft's future stock trade will depend on, Jenny. It's just about the expectations that are horrible, as you know, based on what they deliver and then how they guide going forward. Because the stock is still, just about half from where it was a year ago. So there's a lot going on here, but we don't trade court rulings so much. We trade the expectations for earnings and the guidance going forward, guys.
Yeah, there's a lot to break down here. Jenny, great stuff as always, but we are out of time. As we say goodbye to Jenny, we're going to welcome in Andy Swan, the co-founder of LikeFolio.com, to weigh in on this conversation here. Andy, how I see it is what was once seen as a drag on Uber with its food delivery part of its business is now its saving grace. And Lyft, which was seen as the one that didn't have all those things weighing on its bottom line, is now left with a business that has been drastically impacted negatively as a result of what Jenny pointed out is people just not going anywhere.
Yeah, it's a big problem. I think we've nailed it in this segment already. There's not a whole lot for me to add. I'd say, like Folio data, when we look at purchase intent mentions for Lyft, so that's people talking about actually taking a ride with the company. That's down 71% year over year. So right in line with what Uber reported last week, which I think was down 73% year over year. So we think that, the obvious is the obvious and it's going to be revealed, and it's true. The real question is, how does Lyft project out into the future? How confident can those executives be on the conference call with a rebound in the latter half of 2020, when you've got shutdowns, you've got a lot of different things, a lot of moving pieces in play? I think the good news is Lyft has money to survive, like Jenny said. The other piece of good news is this is one of those companies where the less they do, the less money they lose, which is always an interesting place to be. So putting things on pause may not be the worst thing in the world for them. But I do think that they'll be hurt. Obviously their revenues will be significantly hurt because they didn't have that backup plan like Uber had. I'm concerned about the competitive competitive seeding that they're doing to Uber in terms of both the customer experience, how many people are just getting used to clicking on Uber apps for everything that they need through this pandemic, but also from a driver perspective, those relationships with drivers. Uber is able to keep people busy during this time, and Lyft has not been. And so Lyft will have some expenses in the future as they try to recruit drivers back and get them back on the system, which is always difficult. One of the biggest cost centers of these companies going into new markets.
Andy, I think what you said about their numbers being horrible is exactly right. And I think their numbers will be compared to Uber's numbers when they come out in terms of around 70, low 70% drop off in business. But you, Andy, correct me if I'm wrong, based on the data that you see. If their CEO comes out and says the 8 magic words, we have enough cash to get through this, are the main words that everyone and investors are going to want to hear. They just want to know if they have enough money to get through to the other side when demand picks up, then investors will feel at least marginally secure with this name. What am I missing there?
The only thing you're missing is I would, as an investor, I would want to know how they define get through this. When is that? And do they see any signs of that starting to occur? Based on LikeFolio data, I would say it's pretty tough for them to come out and say that things are looking up. You're up versus March and April, but that's basically saying that you're starting to see less scorched earth. So I think it's going to be very difficult for this company to come out and say that they are really starting to see any level of turnaround. I think that the conversation will be around cash burn. How are they, they've cut some employees, they've cut everyone's pay. They're doing all the right things to try to minimize burn. But for me, the big question is, your competitor over there is doing more business because they have food delivery. Have you even started down that route? Have you even started down the route of diversifying your business or product portfolio? And if not, why not? Because we're 3 or 4 months into this, and potentially you can't see any end in sight. And that's a really tough spot for Lyft. Be very interesting. I think everyone will throw away the numbers as soon as they come out. The numbers won't matter. It'll be all about the conference call and how confident the executives can sound. And they're going to be in a tough spot to pull that off.
Andy, is there a potential for a disappointment given kind of what you pointed out with the incentivized nature of Uber rewards, but maybe just the routine of, hey, I was ordering food, I clicked on Uber, just out of just being my routine, I clicked Uber to get my ride as well. That Lyft could actually be disappointing, and not only is it just having a bad time, but it's actually getting outperformed by Uber just in ride sharing. And does that send the stock potentially into a downward spiral, or being down 30%? Is that already priced in?
Well, that's the question of the day. I think that's the question that traders have to figure out, because we don't have, we don't have any magic 8-ball into what the company is going to say. I do think that long term, I think that this pandemic experience is going to make Uber a much stronger company and really advance them from a competitive standpoint. While I also think it's possible it makes Lyft a leaner company that is more likely to get to profitability faster once things do resume. But again, we don't know when that is. It's going to be very difficult for executives to talk about when that is. And it's really comes down to how patient is the Lyft investor base when there is, a bigger competitor that's just doing a better job in the same space called Uber.